Good morning, I'm James Gruber and welcome to the Morning Report for Monday the 23rd of March. Well, there's been some fresh rhetoric from the US President over the weekend on the Middle East war, which is now in its fourth week. Donald Trump on Saturday US time threatened to, quote, obliterate Iran's power plants if Tehran didn't fully reopen the Strait of Hormuz within 48 hours. Now, the Strait of Hormuz is a key maritime route. About 20% of the world's oil supply is shipped through there. It's effectively been shut since the hostilities broke out. Tehran says it's open to all but enemies. The impact of these latest developments, amongst others, has played out in the price of oil, as well as reaction by financial markets. There's been a response from Iran too on the US president's comments. Iran has warned it would attack US-linked infrastructure, including energy and desalination facilities in the Gulf, if Trump carried out his threat. So, there's considerable uncertainty around the future of the conflict. Let's take a deeper look at what's happened with Aussie futures, commodities and currencies. The local trading session here is expected to see red when it opens. The ASX 200 futures index points to a 1.9% decline following sell-offs in the US, which we'll get to in a moment. On Friday, the ASX 200 closed lower, dropping 0.8% to 8,428.40. That marked 3 consecutive weeks of falls. It shed more than 8% since hitting record highs on February 26. Miners led the declines on Friday, sliding 1.5%, dragged by a 2.9% drop in heavyweight Rio Tinto and a 1.8% fall in BHP. The sector was down 7.4% for the week. Moving to commodities and back to those oil prices, global oil prices jumped on Friday to their highest in nearly 4 years due to Trump's warnings. Brent crude climbed 3.3% higher to $112.19 a barrel. Base metal prices extended losses on Friday from escalation in the Middle East conflict, fueling concerns about global growth and metals demand. Copper futures were 1.7% lower, while aluminium futures fell 0.6%. Gold futures fell on Friday after reports that the US will deploy extra troops in the Middle East. The futures settled down 0.7% to $4,575 an ounce. Iron ore futures rose though after China reimposed buying restrictions on BHP's products, tightening available supply. The futures rose 0.3% to $105.89 a tonne. Let's take a look at currencies. The Aussie dollar was last trading down 1.2% to 70.01 US cents as investors crowded into the US dollar as a potential currency safe haven. Let's go back a step to see how Wall Street and other markets did. The Dow Jones index finished 1% lower. The S&P 500 dropped 1.5%, while the Nasdaq index tumbled 2%. The S&P 500 posted its 4th straight weekly decline. It's also now hit a 6-month low, while the Nasdaq index is down nearly 10% below its October all-time high. So, front of mind for US share markets is the US-Israeli war with Iran. Also at play on Friday, deepening worries about inflation and the potential for higher interest rates. All 11 S&P 500 sector indexes declined, led lower by utilities, down 4.1%, which is unusual given they're usually a safe haven when markets go down. And they were followed by a 3.2% loss in real estate. Wall Street's most valuable companies declined, with Nvidia, Alphabet, Tesla, Meta, each down more than 2%. Microsoft also dropped 1.8%. Supermicro Computer tumbled 33% after 3 people associated with the AI server maker were charged with smuggling at least $2.5 billion worth of AI technology to China. Rival Dell advanced 0.6%. Meanwhile, FedEx, often seen as a barometer of business activity, issued upbeat forecasts and said global demand was holding steady despite geopolitical tensions, and that sent its shares up 0.8%. US government bond yields rose for a 3rd straight session on Friday as escalating Middle East tensions kept oil prices elevated and reinforced inflation worries. 2-year yields had their largest 3-day rise since last April, up 7 basis points on Friday to 3.91%. The US 10-year Treasury yield had its biggest one-day rise since June 2025, gaining 10 basis points to 4.39%. To the European markets, continent-wide FTSE Euro First 300 index finished 1.8% lower, while the UK FTSE 100 also fell 1.4%. Europe fell for a third straight week. It's now their longest streak of declines in almost a year. Like other markets I've been talking about, the deepening conflict in the Middle East is stoking inflation fears and reviving bets for interest rate hikes. Every major sub-index ended lower on Friday, with defence stocks and utilities among the biggest drags, down 3.2% and 2.7% respectively. The heavyweight financial sector and the energy sector lost 2% each. Unilever ended 0.5% higher in a volatile trading session after the consumer goods group confirmed it was in talks with the US-based McCormack & Company about selling its foods business. So what are we watching out for this week and today? In Australia, the key economic data point will be inflation on Wednesday. It's forecast to rise by 3.9% for the year to February versus 3.8% in the previous month. It'll be keenly watched given the recent RBA interest rate hike and expectations of another possible increase in May. However, the inflation figure will not reflect the recent outbreak of hostilities in the Middle East, which economists believe will lead to higher inflation in the months ahead. Today, the Purchasing Manufacturing Index is out, with the composite PMI tipped at 54.7. There are also a host of ASX companies trading ex-dividend this week, including NRW Holdings, Cedarwood Properties and Cash Converters today. And dividend payments are ramping up over the course of this week, including ASX Limited and Aussie Broadband today. And that's a wrap. For further developments on the local trading session, please tune in to the CommSec Market Update podcast this afternoon, and of course, the Market Close video. Have a great day.